Good morning, everyone. I just want to welcome everyone to the program this morning. I just want you to know that MSATP is taking health and well-being of our community members, associates, and staff very seriously. Likely like you, we're closely monitoring the quickly developing effects of the coronavirus and this whole pandemic that what's happening in our state and across in the world. This includes monitoring the news, legislative alerts, and special reports. Last week, the president signed into law the Families First Coronavirus Response Act, nicely known acronym FFCRA, which aims to provide initial relief to American workers. This new law requires certain employers to provide emergency paid leave to employees. On today's program, we have Jonathan Pocius from our corporate partner, Payroll Services, LLC, which is based in Frederick, Maryland. Now, Jonathan, you're the president of the company?
That is correct.
That's what I thought. Okay. Well, thank you, Jonathan. I cannot express my appreciation for you to come on with us this morning on this very, very hot topic. Thank you again. Now, I know we have a very comprehensive bill, and there's many layers, just like an onion. So let's get down into the weeds and let's get started. So I want to start with a couple. So why don't you go ahead and get started, and then we'll go on with some of the questions we want to get covered.
Sure. So thank you very much for having me on with this, and I hope this is helpful. So this FFCRA, which is the Families First Corona Response Act, was passed March 18th, and it actually has there isn't a true effective date. What it is said is the bill has to be enacted within 15 days of the passage of the legislation. So the IRS has to come back and have everything in place by April 2nd. Where we do not know is what will the IRS do as far as when can employers utilize the actual components, the two components, which is sick leave and expanded family medical leave. The reason why we say that, and I'll give you a great example, is this week, if you are sick with the coronavirus, do those absence days actually count because it's before the April 2nd, or is it based off of the pay date? IRS hasn't issued guidelines, but they did issue guidance saying that there would be a 30-day grace period as far as non-enforcement. And so I think that what that's saying, based off what they're saying, is hey, we need time to get all of this in place, and we understand that people are sick now. So you're going to have to use some common sense as to what you're using and look at the spirit of the law and how the IRS is enacting things. There is no definitive black and white when it is, but if you want a hard date, everybody would tell you April 2nd with it. The law is very complex, and there's a lot of gray areas. So there is a lot of questions still with this. However, though, there's two portions of it. It's the emergency paid sick leave, and then there's the expanded family medical leave. And we're going to break it down into those two pieces. The first one is the emergency paid sick leave. And as the IRS has published the regulation, essentially what we understand and how they're presenting it is that every business owner is expected to enact the emergency paid sick leave, regardless of the size, as long as they're under the 499 employee limit. So it's 499 employees or down. If you're 500 or above, you are exempt from this law with it. The emergency paid sick leave, which we call EPSL, has two different categorizations of how pay is to be done. The first one is if the employee is subject to a state, federal, or local quarantine because of the COVID. The second one is if the employee is advised to self-quarantine by a medical provider. It could also be advising to self-quarantine by the government as well. So if you come from overseas, you've already been mandated that you have to do a self-quarantine for 14 days. So that would qualify. Or if the employee is experiencing symptoms to the COVID-19 and is seeking medical diagnostics with it or diagnostics with it. If they fall into those categories, then the employee would be eligible if they're full-time up to 80 hours of 100% of the regular rate. Now that is the key word, it's regular rate. And if anybody knows anything about DOL law, regular rate doesn't necessarily mean just their paid salary. So there is an argument coming out saying, does the regular rate include commissions, bonuses, things of that nature? We don't have guidance yet from the IRS on that. However, if you are paying them their salary right now, you should be okay. If further guidance comes out, you may have to shore that up. The second category is for 2/3 pay, and this is still under the emergency paid sick leave rule. So they are still required to do this, but the employer would only have to pay up to 2/3 their salary. There's caps, and we'll get into that in a second with it. But the 2/3 section of this, again, still under the emergency paid sick leave, is for an employee's caring for an individual that's subject to self-quarantine. So let's say your husband or your spouse or your child had to be self-quarantined and you're caring for them. That would qualify. The other one is, again, if the employee is caring for a son or daughter whose school is closed and childcare is unavailable, okay? Again, we're still in the first section here. And then the third reason is if the employee is experiencing any other symptoms specified by HHS. Okay, so these are very, very broad terms. So when we look at things like this and people ask, well, Jonathan, what do I do? You have to look at the spirit of the law and what it was intended to do. And then you look at the regulations and then you got to merge them. As long as you're between those two areas, you should be okay with it. If you fall under that second set of category, which is the 2/3 pay, it's limited to $200 per day, up to a $2,000 total per employee. The first part is $511 up to $5,110. Now, the other thing that a lot of people are not mentioning with these because they're trying to get information out is that employer provided health care. So the employer contribution can also be included in that cost. So if you look at the numbers, if you're paying somebody $500 a day, that's equivalent to, $2,500 a week. That puts them over that $110,000 category. A lot of employees aren't going to be up into that area. So you can also employ the cost of employer healthcare with that. So that's really important to understand with it. And this is now subject to anybody that has employees as enforcement of this. So if you have 1, 2, 3, 4 employees, you can't get exempted from this part. This, the IRS specifically in the regulations separated this from the other side of things. The next part of this that I want to talk about is kind of specifications, and this is a big question, especially regarding documentation. Everybody's like, well, how is this actually going to make sure it gets documented? And the short answer is it's not. There's no requirement for the employee to provide you a doctor's note. There's no requirements of the employee having to give you anything at all. What we are recommending is that you just get a paper trail. If they're sick, tell them send you an email if they're sick. Okay, so that way you as the employer are actually covering your own butt on this one, because there is no guidelines. It's being rolled out very, very quickly because people are hurting and they're trying to help people right away. The other thing that's interesting with this, unlike typical FMLA, is there's no length of employment required to be eligible for this paid sick. So if you hired them, they're eligible for this paid sick immediately as when it gets rolled out. The employer also can't require the employee to find a replacement. So some employers may go, well, fine, you can be sick, but you need to find a replacement. That is not a requirement. You cannot do that. Also, the one thing that we've been telling people, we've been getting a lot of questions, well, should they use their PTO for the company first? The answer is no. The regulation is very specific that this paid sick leave gets used first before any other company paid time off that's available. Because what the spirit of the law is saying this: you didn't do something stupid. This is catastrophic. Nobody would ever predict this that's going on right now. And so we want to protect your current position, your current benefits, and your current ongoing employment. And that is really where the spirit of this law is. So as we make decisions and we talk to people, we got to remember that's what it was intended to do. So if we're within the intention of the law as well as the regulations and fall somewhere in between there, because there's a lot of gray area, you should be okay with it. And again, I just want to reiterate, there's no exemption for businesses under 50 to apply this. Any business with 1 to 499 employers has to do this with it. One of the questions I get all the time is, well, should I lay off my staff? Because if I lay off my staff prior to the enactment, then nobody's eligible for this and I don't have to pay it. There's pros and cons to layoffs, as everybody knows. Obviously, if you have no cash in the bank, you can't pay people. And so a layoff is probably a strategy that you need to deploy. The other thing that I try to tell everybody with it is if you lay off your staff, you are sending messages to those employees that work for you that maybe potentially you're not a stable business, as well as what type of employer you are. So there's other consequences, let alone having to rehire staff when this is all done, because we will be done this. We are going to come back out. America is going to continue. but at some point, you're going to have to replace those individuals. If people are laid off and they're getting unemployment, they're going to look for the first available job. They may call you and say, hey, Sandy, do you have a position for me? You go, no, we're not quite open yet. They're going to find another job. So you got to balance all of these different things when you're making these decisions. And I know it's a very emotional time, but snap decisions will hurt you more than if you just take a moment and think things out with it. The second side of this emergency family medical leave extends FMLA. And that's an important thing because a lot of people are asking, can I do this or can I do that? You need to understand it's an extension now of FMLA, and it's specifically for the emergency family medical leave. So you have two portions. The paid leave is a separate part of this bill. The second side is emergency family medical leave, and a lot of the guidance is going to be around FMLA laws. And FMLA laws simply state if you have 50 or more employees in a 75-mile radius, you are now have to deal with the FMLA rules. It doesn't matter if it's part-time, it doesn't matter if it's full-time, it doesn't matter if you have 1,000 employees working 1 hour a week. You are subject to those rules because it's based off of FMLA. So a lot of the questions we get, you have to refer back to FMLA for that guidelines. So the FMLA portion of it, which is emergency family medical leave, essentially says anybody that is between that 1 and 499 mark has to offer emergency family medical leave. What that means is that you offer 12 weeks of pay, but the first 2 weeks are unpaid. So essentially it's 2 weeks of no pay and then 10 weeks of 2/3 pay. And we'll get into the reasons how that works with it. However, an employee can use the first 2 weeks of the emergency paid sick leave to supplement those first 2 weeks of unpaid leave. So they can overlap it. So they can get a full 12 weeks of pay depending on what the reasons are. Again, if they're getting 100% paid because they're actually sick or one of those qualifying events, or if they're, they're caring for a child because school's closed, that would be 2/3. So they can supplement that with it. With the emergency family medical leave side of it, employers with 50 or less can request an exemption. And the IRS guidelines and the bill, the actual bill itself, is very vague. It basically says if the business can show that it would jeopardize the stability of the business or the ongoing survival of the business. And it also says that the Department of Labor is the one that is responsible for granting those exemptions and outlaying what that rule is. I think it's pretty simple. I mean, they're trying to get a bill out there that makes some sense to get people out there. If the business doesn't have money or they can't afford to pay it, it's pretty clear it's going to jeopardize the business, right? So there's some gray areas where really they're going to look at you and go, did you do something just try to game the system, or were you truly in jeopardy? Now, the truly in jeopardy, that's, again, who knows? I mean, what happens if next week all my revenues drop because every single business goes out? It's a really hard decision to make, but there's no clear guidelines on that yet. And we're hoping to see some further guidance, but I'm not holding my breath on it. There's a lot of other things going on that they're going to be paying attention to. With the emergency family medical leave, it is based off of 2/3 of their wage up to a maximum of $200 a day or a $10,000 total, okay? So you can't exceed that. And essentially the reason why they're doing this is because they don't want people on the unemployment lines, because when everything bounces back up, you can't increase your GDP, you can't increase the stability of your country with people on unemployment. They have to be employed. So what they're trying to do is everything that they're trying to do right now is to keep people employed, so as soon as this ends, they come back to a job rather than being unemployed. With employee eligibility, they have to be employed for 30 days prior to taking the family medical leave, okay? So it doesn't mean 30 days from enactment, it means 30 days from when they request to take the family leave on this one. The other thing that we're talking about with this is that it's 12 weeks of job protection. So we call this reposition. And this, again, is a very similar rule into FMLA, that if an employer lets people go, or if they put them on FMLA for whatever the reason and they come back, they have to make a similar position available if it's there, or they have to stay in contact with that employee for a certain amount of time, up to 1 year, if a position becomes available. And that's really where you're going to see a lot of issues coming on here, because, for example, my business would not be in jeopardy of this, okay? So I can't request this exemption. So if an employee fell into some of the reasons for the emergency family medical leave is that I have to do this, and then I also have to make sure that they have a position to come back to at that point. So, you know, getting exempted from this rule is a good thing because you also get exempt from all the other FMLA rules that come with this on there. So anyway, that's kind of the way that this works. Tracking of this is kind of an interesting thing. So we've kind of broken this up into 3 different pieces to make it how to track it. And the easiest way of tracking it is to put into 3 different categories. We call it temporary paid sick, which would be subject to the 100% rule for the first 2 weeks up to 80 hours. The second one we would do is called temporary family sick, which would classify them as the 2/3 pay for the 80 hours. The third way that we're telling people to track it is to track it as a temp FMLA. So you're basically taking the 2 bills, splitting them, and then under the 2 sections and splitting them, and then under emergency paid sick leave, you have those 2 sections. Again, I'm immediately sick, that's 100% paid, or I'm caring for somebody that is sick or my child, that's 2/3. So by splitting it, we can track the appropriate COVID codes, which will lead to the tax credits in a little bit later on how we work with that. What we are doing internally also is we're actually creating accruals or paid time off rules. So that way we can actually put buckets and limits on these. So that way employers can track it, because we do believe there's going to be some type of tracking, because they're going to at least want statistical data at the least to see what was going on with it. So what we are actually recommending as well is to set up 3 new paid time off categories that correspond to these 2 different things. And what we're doing is for the sick leave, we're creating the sick leave at 80 hours. And now if they're part-time, it's going to be 2 weeks based on the regular scheduled hours. So if you have a part-time person that works 12 hours a week, then they would be 24 hours. So we create an accrual for the paid sick leave, and then we're going to set those limits based off of the employee. If it's full-time, obviously it's easy, it's 80 hours. But if it's part-time, you're actually going to have to go in there and make sure that we track the appropriate paid leave, because that's going to be different from person to person. I mean, I have a couple part-time people that only work 3 days a week on our busy days, and then I have part-time people that maybe work 4 days, and then I have full-time staff as well. So you're seeing a lot of different moving parts for the tracking. The second accrual that we're recommending everybody set up, and again, this is in my guidelines that we'll send out to you, is to set up the family medical leave for an unpaid 10 days, because it's important that we need to track the unpaid days, the paid sick leave, because remember, those can overlap. So if somebody is using the paid sick leave to supplement the 12 weeks of family medical leave, we want to track both of those, so that way we know that the employee has used 2 weeks and now only has 10 more weeks left on the family leave. The third accrual that we're setting up is the actual 10 weeks. So I'll repeat that again, because I know that probably sounds really confusing with it. We're doing 3 earning codes: temporary paid sick, which is at 100% their wages; temporary family sick, which is at 2/3 their wages; and then temporary FMLA, which is again at 2/3 their wages, but capped at that $10,000 limit. We're then doing the 3 accruals: paid sick leave, which will correspond to how many hours that employee is entitled to. The second accrual is the unpaid 10 days that we need to track. And then we're tracking the 10 weeks of paid family medical leave. So those are how we're tracking it. The next question is about the credits. How are they working? And I will be honest, this is a payroll company's nightmare right now. I want to dispel the rumor first, because there's something going on in even in some of my peers that are saying that these earning codes that you pay people, whether it's the 100% or the 2/3 pay, is exempt from FICA tax. It is not exempt from taxes, okay? It's not at all. This bill creates a 100% credit based off of the wages that you are paying out. So we're going to use an example to kind of put that into terms. If my 941 taxes, so it's the 941 taxes that are going to be offset, which is your federal income taxes and your Social Security and your Medicare taxes for both employee and employer. If I pay somebody $2,000 in paid sick leave, and my payroll liability from 941 is 5,000, I only remit to the government 3,000. So they're trying to offset against your actual payroll taxes that you're incurring right this minute. It is an offset. It is not an exemption. So I'm not sure where that's coming out from, but it is 100%. This is an offset. It's a credit. It is not exempt pay types. Now, obviously, if the IRS comes out and says something different, which I don't expect them to because they've been very clear, we'll let you know on that. Now, where this becomes a problem is if you have an excess credit. Okay, so let's say everybody is on paid sick leave right now, everybody in your office. And we're just gonna use some simple numbers. Let's say I paid $10,000 in paid sick leave or family leave or whatever, okay? That would entitle me to a $10,000 tax credit right now. But what if my payroll liabilities is only $5,000? I have this excess credit, we're calling it an excess credit. So I have a $5,000 of excess credit. Typically in the payroll world, if we talk about like a pseudo adjustment where your rate goes from 2.6 down to 2%, we can just refund it to you really quickly and life goes on. Or we call it a carryover. We keep carrying it over until it's eaten up. In this case, the IRS has allowed employers to file what's called an accelerated refund. And so that excess credit, you can actually file for an accelerated refund. The question is how? We don't know. And the other thing is we don't know how long. They're talking about issuing checks out to Americans right now. So the IRS is going to be overwhelmed. So we don't know how this is going to take place or how long it's going to take place. The other issue that you guys have to be aware of, and we're advising our clients of this, is if a customer files for an accelerated refund, their 941 might be screwed up because what's going to happen in most payroll systems is that the system is going to calculate this excess credit because we're not going to refund the excess credit because we don't know what's going on with it. We can't just keep carrying it over. But when the 941 comes, there's going to probably be a line item that's like an excess credit of some sort on there. And when you file a 941, as you know, if you overpaid your taxes, the IRS issues you a refund check, right? So what we're seeing here is because this is so quickly, softwares are trying to catch up, they're going to take the path of least resistance. And chances are we're not going to be able to document accelerated refunds. And this is where the problem really comes in. So if you have clients that are taking accelerated refunds, and I am not discouraging that at all, do what you need to keep your business afloat. You need to advise them that their 941 might be wrong and they might get another refund check when that 941 goes out. And if that client, like all clients do, they see money from the government, they go, woohoo, right? They think it's free money, it's theirs. Well, what happens if they take that money, cash it, and they weren't entitled to that refund? The government is going to come collecting those funds. So what we're saying with it is if you need to do those accelerated refunds, we're not guaranteeing the accuracy of your 941 if that refund's on there, because there's no way to know. I mean, we service 400 customers and 12,000 employees. Okay, we're by no means considered a small, but we're by no means considered large either. And I'm telling you from a company with 400 customers, there's not a chance that we would be able to document every single person's accelerated refunds and figure out how that's going to work in there. So that is something to be mindful of, and that is the biggest risk of this. Outside of that, that's kind of really what we're telling people with it. It's really that simple for it. We try to make sure that you're not cluttering things up. Where the questions come in for it is, what constitutes a quarantine? Does the government, Hogan shut down non-essential businesses yesterday, right? 5 p.m. Is that a quarantine? We've been on the phone with 3 different labor attorneys and different attorneys from all over and talking to government lobbyists. There's no answer to this. So, I always come back to the question going this: what do you call shutting down a business that is legally operated? It's not defunct. They're up to date with all of their licenses. What do you call that? I don't know. That is a big question. The only word that comes to my mind is quarantine. Why else would you shut down a business that's fully operational and functional? We don't know. And there was an article that came out in the National Law Review, which is a very, very widely published magazine for lawyers. And nobody has an answer to this question yet, and it's not defined. So these are things where these are conversations I'm taking offline with my customers. I'm not sending emails out about it, and I'm just explaining to them the areas of where there's grayness inside there. You got to do what you think. And again, I think the spirit of the law and the regulation, that's where you got to fall between with this one. There's no black or white answers for it. You know, again, what do you call a functioning company that you shut down just because of the COVID-19? Well, the government is arguing, well, if we shut it down and we basically do quarantines to these things, that it slows the spread. And you see Hogan, you see all of them talking about, you know, stopping it by shutting people down and shelter in place orders. Shelter in place order is a quarantine, but a lot of governors, like even New York, said, hey, we're not calling it shelter in place because shelter in place is for an active shooter or something where there's some type of physical damage coming to that person. So they're playing the political line here because they're trying to make sure people don't panic, but at the same time, it's creating a lot of uncertainty of what constitutes a quarantine for these credits. So, you know, those are the things where you got to be careful on what you advise your clients with and kind of what they need to do. Additionally, it's the same thing with the requirements about if somebody's sick or if they're taking care of people. What if somebody says, hey, I got a kid at home and they can't work remote? Does that constitute them being able to claim the credit for it? I would argue yes, because they can't work remote. They fall into these qualifications for it. And again, the spirit of the law is recognizing that tons and tons of Americans are without pay right now. You're going to have to make those decisions for it. And every client that we talk to, we're having a discussion on a client by client level to see what the situation is and what the level of risk is to that individual. I mean, that's as much as I can go over with it. There's no documentation requirement. So, you know, getting a note from your employee that says, hey, this is a situation that would qualify the employer to take the credit. And that's kind of what we've been telling people right now. So.
Well, okay, Jonathan, thank you so much. Just to follow up on a couple of things. So when do you think, I'm assuming taking these credits or whatever the case, we're going to be seeing a new 941 or a new payroll, because this is what the reporting. Any indication through when that's going to be coming out?
No, we don't. I mean, you got to remember, it's not going to take place until the second quarter regardless. So they have until, you know, essentially they can bring it out on June 30th and say, hey, we've just deployed it. We've seen that many times, even in the individual side when we're talking about new tax forms. I mean, how many people have filed taxes and are sitting around waiting for the IRS to update the form? I mean, it happens all the time with it. So we don't have that. I do want to mention one thing, and this is why we're trying to tell people not to make snap decisions. So the original Senate bill, which we actually got a hold of, it contained language that opened up federal funding for small businesses through the SBA, where the loan would be forgiven as long as it was used to offset payroll, right? There was language in there that said if you got this loan, though, that you would not be eligible for the sick leave credits. So essentially, you can't double dip. So this might be a moot point if small businesses go and get this loan. So that's why we're trying to tell people, like, we have customers banging down our door saying, we want to do this, we want to do this, we want to do this. And these are companies that are going to exist. Like, they're going to keep going into existence with it, but they may also file for that loan. And we're encouraging every single business, as soon as this loan gets open, every single business should be running to their bank to get this done, because you don't know what's going to happen. And again, if you get that loan, and you start paying payroll, you can use it to forgive that loan, but you would be ineligible for this credit. So, you know, what we're telling people is this. It's very easy to reclassify wages later. So let's say, for example, that the language changes with the loan, or it runs out of funds. You can always go back and reclassify those paid time off wages into the COVID code later on. So, you know, be mindful that things are moving fast, and that way we may come to find out that the IRS isn't going to create all this different 941 language, because maybe it's not necessary at that point.
Mm-hmm. Good points, very good points. Now, as you know, we have many members who are solo practitioners. So how can will they be able to claim the credit, being that they're
That's That's a real tough one, and it's really going to be based off of payroll. Okay, so one of the questions that we've been getting a lot of, and this ties in, is if I am an S corp, can I, as the owner, claim unemployment in Maryland? The answer is yes, you can, because you're considered covered. Well, for sole proprietors and LLCs, so, that are not taxed as S corps, they may not be taking a W-2. So there's no clear guidance on that right now for it. Now, I know the new language for this potential bill coming out had language to address that, but for as far as I'm seeing in there, there's no real guidelines. If you're not on payroll, it does not seem that you can take this.
Good points.
A real argument to be an LLC taxed as an S corp, huh?
Yeah, there you go. Now we do have a couple questions coming up. The first one is, I think you mentioned that the payroll credit is against the employee and employer liability and is taken on the 941 basis. How does the money go back to the employee?
Well, first off, I want to say hi, Miss Jan. It does not go back to the employee at all. It's an employer offset completely. So any tax credit is going to go back to the employer. So you would just pay, whatever the net check is off their wages. So let's say their net check is $1,200 and their gross was $2,000. That $800 is an offset to the employer. There is no employee refund. From the employer side of things, what we're hearing is that the IRS will issue a refund check to the employer if there is an excess credit.
Okay. Next question. He says full pay for quarantine, then limit the $511 per day. So if full pay is more than $511 per day, they still only get the $511, or do they get full pay?
It's capped. So it's capped on the amount of pay that you have to pay the individual for it. So if they exceed it, so let's say it would have been $600 a day, it's capped at the $511.
Okay, great. Okay. So that sounds super. Let's see. We talked about tracking. We had that planned out, and we talked about how to handle. Okay. We got a new question here. Many small businesses can't afford to pay the employees at all, PTO or accrued vacation. So employers are required to pay the EPSL. If small businesses can't afford to pay it, nothing coming in, how are they going to comply?
I wish I could tell you. First off, I want to just reiterate, there is no exemption for the EPSL. There's none. From the way that the IRS wrote up the regulations on Friday night they released it, they specifically separated the two portions of family leave for that. I don't know what to tell you. I mean, that's the question. If a business can actually pay working employees because revenue's coming in, and then all of a sudden somebody gets sick, there's nothing that can be done right now with it. I mean, this is how the guidelines are written. I don't know how to answer that. That is the question.
Wow. That is a very good point, and it's very sad because, like you said, it's being required by the law. But if the companies don't have the money to do it, they are really, as they say, a rock and a hard place.
And that's why that loan's so important.
They're hoping. I guess that's where they're hoping the SBA loans or a private loan will help. I hate to say it, they might have to tap into their savings, which would be very disappointing. The next thing is his first quarter 941 filing season filing requirement been extended. Has 941 first quarter been extended?
Oh God, I hope so, but not right now. It has. There's no extension on the 941 yet. We're expecting to see something, and I really hope so, because that's going to be a real problem.
Yeah, that is true. That's one thing we haven't heard about, is extending the 941 extension. So that is a good point. Okay. Any other questions? I don't see anything else popping up right now. Okay. All right. Well, Jonathan, I cannot express my thanks enough for what you've done today. I know all the members who are on today truly appreciate your time, because I know how busy you are with everything going on, because you have to keep abreast of all this, being that you're the business you're in. And so it's important that you do keep all up to date and taking them and doing this. And so we really appreciate, and we appreciate your sharing the documentation that we have, that you're going to be sharing with us going forward. And with that, I think we'll call it a day.
Thanks so much,
everyone, to be safe, wash your hands, and be safe.